Hello and welcome to our viewers on cruxinvestor.com and also to our listeners on Cruxcast, our podcast series. And for those of you who are new to Crux Investor, please click the button in the corner of the screen to subscribe to our YouTube channel. Today we're talking to Mike Young. He's the CEO of Vimy Resources. We're going to talk about a variety of topics, including contract versus spot price, get an update on his Mulga Rock and Alligator River projects. We're talking about, of course, 232 and a variety of other subjects. If you want to take a look at the description below the video, there are timestamps. If you click those, you can go to the relevant bit of the video so you don't have to listen to the whole thing in one go. Here we go. Mike, how are you?
I'm very well. Thank you for having me on again.
Yeah, no problem. It's good to speak to you. So I'm trying to work out whether much has happened or not a lot has happened since we last spoke.
I guess a lot's happened. We have raised some money, which is good, and we're planning for the drilling up in Alligator River. Yeah. But I think, as we talked about pre-interview, the Section 232.
Well, let's talk about all of the above, okay? So let's first things first. You did raise, I think, was it about 1.8 million Aussie?
That's correct.
Right. Yep. So why did you do that?
So we needed to top up our working capital. It was coming down towards the end of the financial year. We had a remaining capacity of about 37 million shares, which we used up. That has brought on some new people to the register, a few new uranium-specific investors that we were really pleased with, some of whom your listeners would know. And then we had some really good support from our existing shareholders as well. As I say, it was 1.8 because of the remaining capacity. Now the ASX says I'm not allowed to say it was oversubscribed, so I won't.
Don't say that. So tell me, what's the use of proceeds there? I mean, what's it going to be used for? Because, and the reason I ask is obviously when we spoke last, we recognized the fact that some of the smaller companies would, depending on the outcome of 232, which we'll talk about in a minute, may need to kind of top up, just kind of keep the lights on, keep things moving along. You have a DFS, which I think you were going to revisit. You're obviously continuing to do work on Alligator River. But you got a bunch of overheads as well. I think some people are talking about, salaries and overheads and G&A, and what have you been doing about that?
Yep. So I'll discuss all those. So obviously, the Alligator River is our main project that we're doing field work on. So right. Just so your listeners are left with no doubt, Mulga Rock remains our premier project. It's a big project, £3.5 million a year. It needs, I've said before, a $55 plus price to work, and we need the market to come up to meet that. We did a DFS on that. The DFS was completed over 18 months ago, and so we necessarily have to reset some of the figures in it moving forward. So we're doing a refresh study on that to look at the areas of the DFS that may need to be recalculated. Now, there will be no new engineering. The plan that we want to use to mine it and to treat the ore will not change. It's just looking at, have costs for human capital gone up, have costs for machinery gone up or down. And in the discussion I had this morning with an engineering company that helped us in one of the phases, they said they really have not seen prices move very much, even though we're in a mini iron ore boom at the moment. It's not like the last boom where wages got out of control. Our second project where we are doing field activities is Alligator River. We want to do some drilling up there. We're waiting for another company to finish with their diamond rig so we can bring it over to Alligator River and do some holes in both Angularly and Suchwa. And I'm absolutely pumped. I hope I can get up there while the rig's on site to see the core come out, but I'm really pumped about drilling Suchwa. And then you asked the question about the overhead. Sorry, just going to grab some water.
Why don't you do that? Don't want to lose you mid-interview.
It is the afternoon here, so is this really water? Yes, it is. So funny story, right? It's Canada Day today. And the first Prime Minister of Canada, Sir John A. Macdonald, gave a very passionate speech one time about the Intercontinental Railway. And he spoke for quite some time. And as he was speaking, he was drinking quite a bit of water, and it turned out it was actually gin. So it's always, I'm very proud of that as a Canadian.
Are
your listeners, that is water. But, with the Section 232, sometimes I feel like having gin. Anyway, what was the next question?
The next question was, I think you're just going to tell us about some of the work going on at Alligator River and maybe give us a sense of, out of the 1.8, how much is going on to the project. So how much is being spent refreshing the DFS at Mulga Rock? How much are you going to be spending on Alligator River, moving forward over whatever period you've defined the 1.8 to be used against?
Yeah, the Alligator River budget is about the same as it was last year. It's just a shade under $2 million. We've already spent some of that. We've had heritage surveys, Aboriginal meetings on site. We have payments, rents and rates, payments to the Aboriginal people. So we've started to eat into that budget a bit. So we will this year again, because of the market situation and cash situation, it will be a small program, but it won't go over $2 million for the entire field season. Mm-hmm. The one thing about Alligator River, though, is that we don't have the luxury of waiting for the market to improve and raising money at a later time because of the wet season. So once October hits, you're pretty well packing the camp up, getting it, cyclone proofed, putting everything away, and then you wait until you come back in the following May. So because of that, we do want to do some field work. The guys are up there doing ground geophysics, they're doing ground sampling, but we want to poke some holes into those targets, and that's something we'll do this year. We do that in response to how much money we've got. So one thing I'm really proud about the guys is just they spend money very wisely on that Alligator River project, and we get a lot of information for the spending.
So circa $2 million on Alligator River. How much cash have you did you have before the raise?
If you had gone through our last quarterly report, the cash position would have been about 1.2, 1.3. So together with the raise, we're at about 3 million now.
Right, and that sees you through till when, do you think? I mean, are you going to have to go back out to market?
That'll take us into some point before Christmas. I mean, you don't have to be Einstein to figure out we'll have to tap the market again at some point, but the thinking is that after the 232, we should see some positive sentiment in the market, and it won't be as dilutionary. I mean, it's a necessary evil of any company in the phase that we're in.
For sure.
You just have you got two choices, right? You can pack up and do nothing and have, two people in the office waiting for the market to improve, in which case you're burning money and doing absolutely nothing. Or you can at least try and put some money into the ground. Any other activities, which is what we do.
Yeah, but let us come on to that in a second. I just want to finish off on the reason for this raise, and also something I touched on earlier, which was, you got people saying, and I guess it refers to what you also just said, which is, in terms of the overhead right now, salaries, the headquarters, the G&A in the field, etc. I mean, have you felt the need to do anything about that in terms of reducing the cost while you are in this kind of period? Not pack up the bags and go home, but how do you kind of keep things moving forward and look at your overheads?
Yeah, it's a good question. It's one we get a lot. And one of the things we did do is when the DFS was finished, Tony Chamberlain, who was our COO, he left the company, and we didn't replace that position. We don't need to at the moment. He stayed on the board, so we have the continuity of the intellectual property, if you like. And then two people that we have on staff, Julian Tapp and Scott Hyman. People do ask about the number of people we do have, and one of the things about uranium, particularly in Western Australia with the approvals process, we wouldn't need Scott, who's the uranium marketing guy in the States, and we wouldn't need Julian if we were doing, say, gold or salt or lithium. So Julian manages the approvals, and he also does uranium market economics. And I'll come back to that because he's part of the WNA working group and on supply demand. And that's going to be a major catalyst when the new fuel report comes out. So let's come back to that in a little bit. And Julian's only working for us part-time, and Scott in the States. America is our number one market. It's the biggest free market for uranium there is. He's done a mountain of work getting in front of the utilities, understanding, for example, can we sell all of our offtake into American markets? And if not, where else can we sell it? And if so, who are we going to sell it to? So Scott's, prepared the groundwork for when the market comes up again. And I think this is really important. And I learned this in iron ore. When this market switches and it will switch quickly. The utilities will jump back in very fast, and they'll be competing with one another. If you haven't done your homework, if you haven't done the groundwork, if you haven't been in front of them, and you're not the first person they think about when they're topping up their portfolios with that junior section, I think we talked about last time, you've lost, right? You've lost, you've missed it. And the way the contracting works is they happen in cycles, and when the contracting window closes, it's closed again, and you're at the vagaries of the spot market. And we know what I think of the spot market. So we believe that what we've done is set the company up very, very well for when the market opens up. If we had not had these guys on staff and had just been ticking along, and it had been me traveling to America to try and talk to the utilities, the outcome, the future outcome would be much worse.
Right. Okay.
Now, most of us have also gone on to part-time. So we recognize that we need to watch our dollars. So Julian works, I think, 2 days a week. I'm working 4 days a week. Our CFO is working 4 days a week. So we took a decision, rather than letting more people go, that we would work part-time and lose a position through that process. So we've done what we can, but with keeping an eye on the strategic outcome that we need to have.
So, I mean, that interests me. So you've said you've gone down to a 4-day week.
Yep.
Okay, and pro rata the salary accordingly, presumably as well.
Correct.
Yeah? Okay, and I'm always interested with junior companies when executives pay themselves big salaries but don't take big equity positions instead. You know, in terms of the remuneration, you do see a lot. I mean, how have you guys done that? Are you saying, I don't mind taking less cash because I think I can create something great here. I'm going to take my significant portion of my remuneration in shares. I mean, how have you guys structured that?
That's a good question. And oddly enough, when the notice of meeting for the EGM comes out, which we'll be having shortly, that very question will be addressed, and that's really all I can say.
Okay, so you've thought about it. It's something you're addressing. Okay, let's see what happens.
And it needs shareholder approval. So it's something that we're doing and it needs shareholder approval.
Okay, fair enough. Let's step back. We'll wait till that meeting happens, and we'll see what comes out of that. We can pick up on it next time we talk. Let me talk to you about strategy, because I'm fascinated with juniors. The mentality, because we recently looked at 5 different gold companies in West Africa, 3 different sets of strategies there, and they've all played out differently. So for you, junior uranium space, the vagaries of the market, it's a very erratic space. What's your view? You're going to have to go back to the market at the end of this year, right, for some more cash. Are you going to go big and get it while you can, or are you going to take it in small increments and minimize the dilutionary component? Because again, different people have different views on that. What's your take?
Oh, look, it'll depend on where the share price goes. So I strongly believe that the 232 is going to be a catalyst. I think when the fuel report comes out from the WNA, you're going to have another catalyst. I think that the sentiment in the market will change drastically. I don't know where the spot price is going to go. I've given up trying to predict it, because as we know, the spot price isn't a free market anyway. So God knows where it's going to go, but it's going to go up. Whether it's dragged up by speculation or whether it's dragged up by midterm contracts, I couldn't say. My view is that you will see utilities start to come into the term market. And if you've got buyers on the buy side of that spot market, then the price will go up. So I think that, combined with an outcome on Section 232, which I've always said will be good or gooder, which is a reference to Dumb and Dumber, by the way, just in case not everyone gets that one. So I think the outcome will be that, with certainty from the 232 decision, you will see the market open up again. The utilities have absolutely been frozen out. They have just shut up shop in America because of 232. And once there's a decision. But
what's your decision? The market's the market. What is your decision going to be in terms of how you take money going forward? You can take all the money you need for the next couple of years in one go because it's there. And let's face it, if you think the way this is going to go the way
if it's there, you take it.
You take it.
Every chairman of every company I've ever worked for has always said, if it's there, you take it.
Right.
You get the money while
what you're saying with that strategy, it's slightly more dilutory initially, but in the scheme of where you think this thing's going, it's going to be a safer, better, more sensible bet to just take it while it's there than do lots of small, incremental, less dilutory raises.
Well, they're less dilutory in the small term, but if you do more of them, you get the same outcome. So, you make those calls as a judgment when and at the time you do the raise, you assess all those things. Now, one of the things I'd like to look at in the next raise is looking after our existing shareholders. So there's lots of options there. There's you can do rights issues, or you can do share purchase plans, or whether it's underwritten or not underwritten. There's lots of different ways of looking at it. But one thing I want to do is make sure that our existing shareholders, particularly in the smaller retail side, get looked after, because they have been very supportive. Particularly with the Morgan's stockbroking network, they've been very supportive and very patient. And they understand the uranium thesis, particularly with what's coming up, the catalyst coming up. So we want to look after them as well. So. There's a lot of competing interests, because you also have a lot of new players. So as we're seeing new investors come into the space, people I've not heard of before phoning us up out of the blue. The one thing that really flushes a lot of people out is when you go into a trading hall, suddenly the phones start ringing, can I be involved? And we had a lot of that. But, so there's people who have been following the story and they're phoning, we're seeing a lot more of it. So you can see that there's a thaw in the sector. You can see that people are starting to get into it. The yellow cakes, and those guys are catalyzing more and more interest in the investment side of things. So,
right,
as I said, we had good response to this one. We were limited by our placement capacity. We're going to correct that, and then we'll move it forward.
Okay. So lots of new equity type investors coming to the party, or certainly having conversations about coming to the party. Again, depending on what happens in the market, I'm sure. And I do want to come back to 232, which I apologize for in advance. But just finish off on this financing component. Okay, at what point do banks get involved? How many contracts do you need to have in place? And to what value? Because obviously you're a small player, you can have lots of small contracts with different utility providers in the States or wherever. At what point do the banks say to you, okay, I feel comfortable bringing some kind of debt component to what you're trying to do here?
Yeah, we've done a lot of work on that. Those are commercially in confident discussions that we've got. So what I can say is that a good majority of the offtake will need to be contracted. I think I have said as much as 75% in the public domain, so I can repeat that. But as for the numbers, we're not going to talk about that. That's obviously commercial, but we have talked to banks, and we do have a plan on that. So we have an idea of what pricing we need, the percentage of contracts that we need. And it's one of the reasons that we concentrate on America, is the fact that with American utilities, you have low counterparty risk, and it's a third of the market. Well, just under a third of the market. So that's why we've got a guide in America for that exact reason, is that the American utilities will definitely be our base load in terms of getting financing.
But obviously banks don't know much about mining. Well, some know more than others, but compared to you, they don't know very much. So what sort of margins do they need from you to be able to get comfortable around any kind of debt provision?
Look, we've had preliminary discussions. We haven't gotten into that amount of detail. It's kind of a chicken and an egg question. But what I can tell you is that the banks that we are talking to understand uranium very, very well.
Okay.
So there's a bit of parlez-vous français going on.
Okay. So let's again. So I'm just asking questions, which are a little bit more involved than we had last time, because I think you've helped people move their understanding on a little bit, and certainly conversations we've had with other uranium companies too. So just want your view on contract and spot. You've told us your view on spot. It might be worth reiterating again in terms of there's no real such thing as a free market in spot, which it should be. So can you explain to us why are utilities currently loading up with cheap spot price product, or are they not buying? I mean, what are they actually doing at the moment? Because they're not doing contract.
No, there's very little action in the spot market from utilities. So I was looking at the trade tech report from the weekend, and when you look at it, it's intermediaries and traders, and then there's a few producers. So that'll be some of the one of two American producers. And then there was a utility at the bottom. It was a very small amount of it. And the spot market as an overall, on a monthly basis, the overall tonnage that goes through the spot market, and really the only tons going through that market are the ones that utilities are buying, because the other tons are being traded from trader to trader, right? So when you see a report on the tons that have gone through the spot market, you're seeing a lot of churn.
Right. Okay.
You're seeing each sale that happens is accumulated as part of the spot market. But if I sell you a piece of uranium and you sell it back to me, that's double counting, and that happens a lot. So right. The spot market is very cleanly traded. And as I said before, there's no clearinghouse, right? So the price mechanism that you see is reported voluntarily. So it's not a true market. It's an arbitrage floor price is what it is.
Got it.
Now on the contract side, there's just no contracting. There was one RFP in the entire time of the Section 232. Certainly from when it went to the Commerce Department, there were probably only 2 or 3 RFPs, and they were for a small amount of material.
Right. So there's basically not enough product on market for utilities to kind of load up cheaply, and what tonnage there is sort of just being recycled through the market, and people making some sort of arbitrage.
By and large, yeah. So we saw that late last calendar year when Cameco said they were going to come into the market. We saw the price almost hit 30, and the expectation that Cameco was just going to wade into the market and eventuate, and it's pretty much like a share in a company. Yeah. When you've got nothing on the buy side, it dwindles again, and that's what's happened. People quitting positions. So. It's not a true reflection. It's not the spot market does not reflect what's actually happening in the real world.
And what about do Cameco have contracts to fulfill themselves? And are they doing
they do.
It?
They've got about 18 to 19 million tons of contracts to fill. So they're managing their own stockpiles. They've still got some stocks, and then you have to ask the Cameco guys, because people from outside looking in. We don't know what their strategy is. Right. So we could speculate. I don't want to. Tim's pretty open when he does his quarterly reports. But at some point, they're either going to have to turn MacArthur back on or buy more on the spot market.
With the contract, in the contract space, these contracts are at set prices. Yeah. So Cameco has got people like Cameco have got contracts in place with the utilities at set prices, and they're not filling them now because it's too expensive to produce. They've shut down some of their assets, and they're unable to fulfill these. So, are they obliged to do so within a certain time frame? Do they get penalties if they don't?
Oh, they'll still be. Well, I don't know the contract. I don't know the contract terms, but. Cameco is quite open about how much they've paid. I think, contracts can be, that's the thing about this industry, is the contracts are all private, but they can be, floor and ceilings, they can be collars, they can be base escalated, they can be related to the spot price. So there's lots of different contracts. So Cameco, obviously, the contracts that they have, I assume are related to the spot price, because as the spot price fell, they closed MacArthur. If they had a fixed floor, like the one they had with TEPCO, they would have left MacArthur open. So, our contracts will be a floor price. They have to be. We need to baseline. We need to base load our contracts with a floor price, and that floor price needs to be, as I've said in the past, 55 or higher. Now, I think when you look at when we will be in production, which would be 2022 or 2023. There's every possibility that contracts at that price will be being filled. Right. There's no doubt. Okay. Otherwise, as we know, the world runs out of uranium just because of the marginal cost of production.
Right. Okay. Well, let's quickly skirt around 232 because I want your opinion. Okay, everyone knows 14th of July. It's the big day supposedly when something's got to be announced, or there's a 180-day extension to allow them to negotiate trade terms with interested parties, is what I'm reading. What's your take on 232 timing? And
our understanding is that a decision has to come out by July 14th. So we've heard that, it could be delayed. Trump could make, a different decision. Sorry, the president could make a different decision. Our view is that he won't. What happened with automobiles was that there was a decision at the time that he had to make a decision, but the implementation was delayed. So that was in the automobiles, for example. So I think you've got to remember that the American utilities put together a group called AHUG to lobby for their side of things. And they will be telling the president and his administration that, look, we can wait a little while longer, but we can't wait much longer to start writing contracts because by 2021, 2022, we're 60% uncovered and we should be writing these contracts today. So I think there'll be pressure for him to make a decision. It's the same as the two petitioners. They're going to want to spend, if the decision goes the way they hope it will, then they're going to want to spend capital and raise money to expand their operations. So you've got a lot of people waiting. So my view is that I don't think they're going to stuff around and do another 180 days. That's not my view. My view is that it's going to be it's not going to be a 25% quota. We saw that news release from Bloomberg on the 21st of June. That was obviously that's an old political trick called floating a balloon, right? You just leak a bit into the press and see how everyone reacts. And then you use that as a way of saying, okay, well, here's the best decision. And I absolutely believe that the administration and the DOC put that information into the marketplace to see how the utilities would react and how the petitioners would react. And not so much the market. I don't think they're that elegant. But, that was definitely a way of floating the balloon up. And there was one of the things I said was it would be 5% and then go up 5% every year to 25%. But I think that was met with a lot of, AHUG wasn't very happy about it. And you've got to remember there's probably 2 orders of magnitude of people working for the utilities than there is working for the miners. So, I don't envy the decision because you've got to balance both these competing forces. But, No,
that's a really interesting view. I mean, another interesting view which you put forward when we spoke last time. I asked the question: did you feel that this was a national security issue? And I've asked a bunch of CEOs in the uranium space how they felt, and it falls very clearly into 2 camps: the American companies, all of them, and American fund managers, all of them. It's a national security issue. Everyone outside of the US, not so much. And I just thought that was interesting in terms of the psyche here. Not necessarily because of the story that was being pitched, but I think people truly believe it on both sides. And I just thought that was kind of interesting reflection of the societies that we're dealing with there. I mean, has your position changed?
There's a bias about you will always be biased towards the outcome that you hope you're going to get. And so, on the American side, of course, the 2 petitioners are going to say it's a national security issue.
But Mike, so did other American players. It wasn't just...
What's the issue? What's the national security issue?
I guess it's around the nuclear fleet. People are arguing. They've got a very large nuclear fleet, which they want to be reliant on people outside of the country to supply the energy source for that. Was the key driver. But
why not have a 100% quota then? I mean, so if there's a national security issue, then you should be getting all your uranium from America, right? If there's truly a national security issue and you need to make sure that if there's a problem, you have all the uranium you could possibly use, shut the mines down until you need it. Right? That to me, that's just a furphy, right? That's just something that was retrofitted, right? We had 2 companies who couldn't compete, The utilities didn't want to write the contracts that they needed, and they found some loophole in the law under Section 232, and they initiated that investigation, hoping utilities would come to the table and write some contracts with them. But once it got into the Commerce Department, they lost control of it. They had to back in behind it.
But it's not just you. I think there are quite a few people in the same boat. My initial reaction was it was a commercial means, and a very brave one, and I do admire it, to put forward the petition. But as Dustin Garrow said when I spoke to him, the ex-Paladin director, his view was that it was something which they felt was a good commercial decision, but it's actually frozen the market. And in retrospect, it killed the momentum which was building up prior to that. And maybe we would have been better. My interpretation of what he was saying was maybe it would have been better not to have done that, and perhaps the market would be flowing and running, including for the benefit of everyone, including those two companies. What do you think?
Oh, I agree with that wholeheartedly. But I think when the guys went into this, UR and Energy Fuels went into this, I really don't think they realized they were taking a tiger by the tail. I really think, and it's an informed opinion. I think that they were hoping that at some point utilities would come to the party and basically write contracts that were sustainable for these guys. I mean, if it is a national security issue, they shouldn't be buying spot material from overseas and selling it into the domestic market. But they're running a business. I get that, right? And if I was living in the States, as passionate and one-eyed as I am, I'd probably be on side.
Well,
but I'm not.
There you go. And I think that one will run and run. But I guess when the price comes back and people get produced.
Interestingly, one thing I will say, we've just seen that up in G20. Prime Minister Morrison, who's just been re-elected, met with President Trump. And what was interesting is that President Trump and Scott Morrison's team, they had a dinner together, just the two of them, well, plus all their advisors. And what I read in the paper is that the president got off his plane and within 20 minutes was having dinner with Prime Minister Morrison. And one of the first questions he said was, "How did you do it? How did you win the election?" So President Trump has admiration for Scott Morrison. He's a conservative. He won the unwinnable election. There's a lot of parallels between him and Trump in terms of winning that election that everyone thought they would lose. The same sort of leftist nonsense in the press saying they were going to lose and they still won. So there's a bond between them that just doesn't exist with, say, Trudeau or some of the other countries. And so my hope, and it's only a hope and speculation, is that will stand us in good stead for whatever the outcome of the 232 is. But again, and I think my colleague Brendan Munro put it best. He just said, at the end of the day, the president makes the decision, and it could be anything. We could be told we have to mine uranium on the moon. Who knows?
Well, there you go. We do have a space. We do have a space force now, so maybe. So let's move on to the WNA, the symposium in London. You talked about a fuel report. Are you seeing that fuel report as a catalyst for change as well? Because obviously you had one in April, somewhere near, was it Spain, the last one?
That was in June. Yeah, I did in Lisbon.
Lisbon, Portugal. Sorry. Okay. You mentioned it earlier, the fuel report. What's going to change now versus back in June?
So the fuel report comes out every 2 years, done by the WNA. It's a seminal bit of work. So the WNA is really the go-to source for a lot of analysts in terms of the number of reactors there are, demand going forward. Most times when you see an analyst report, they'll be referencing WNA. They may be referencing one of the other analysts, but ultimately everyone looks at that website as the oracle. What's happened in the last 2 years is that the demand and the supply and demand working group, the makeup of it has changed. Julian Tapp, who works for us, has joined that group. Brandon Munro from Bannerman is a co-chair. And so what's happened is Olga, who runs it from within the WNA, have fundamentally changed the way that they look at supply and demand. And what I can say is that the makeup of the committee has moved towards what I would say is a more commercial way of looking at the supply and demand, particularly on the supply side. And so I can't really say any more because Julian doesn't talk to me about it, which is quite right. But what I think is that report is going to be what I call a slow burn catalyst, because as people start to work through that report and look at the supply demand economic going forward, basically they're going to see that the I guess avalanche of uranium that people imagined would be coming with a price increase probably won't be there, and that we are heading towards a systemic shortage.
Right. Okay. Well, that's going to be fascinating. We're actually talking with Julian tomorrow, so I guess I'll get some of that or none of that from him. But it'd be interesting to sort of see what, at least how they're approaching it. But to that point, if I look at what's going on out there, the French are they were getting rid of nuclear. Now they're extending the life of some of the reactors there by 10 years. You've got China bringing on online Taishan 1 and 2. You've got India with the world's largest reactor. You've got lots of these modular, smaller reactors. Basically, the infrastructure around the world is being built, geared up for nuclear power. Okay, these are usually government-led programs, and what I'm not seeing a lot of is government-led pressure on the uranium market to start performing. So have you seen them? Have you seen any pressure from governments with regards to supply? Because this will become a national security issue for other people, to the power security.
That is a really, really good question, and I'm going to pretend I thought of it first because I wish I had.
Right.
No, we're not. China has gone about buying a lot of uranium. They do have large stockpiles, but that's material that is earmarked for reactors, and they have taken advantage of the low prices, buying a lot of material from Kazakhstan. There's no doubt about that. And the Chinese, I think, certainly during the 2000s, when they had massive buildup of infrastructure, they really did get stung by the high iron ore prices. And I think they've taken that lesson. The one thing I admire the Chinese for is that they never make the same mistake twice. And for example, we saw that in Hong Kong. So they have built up a good stockpile of uranium. They will still be a customer. They're still growing. Nuclear power is very important to their long-term plans, particularly with particulate pollution. But not so much in other countries. I think other countries, particularly in America, which is still a quarter of the market, they believe in market dynamics. And I think the utilities do understand that they're going to have to pay more to incentivize new supply. But no, there is not. It's a great question. There is not a concerted. Well, the French government has EDF, right? So EDF, although it's a public company, I mean, they still are quite interconnected. It's a big part of their power supply, of course. So, the French government will be talking to EDF, and EDF, they go out and they're very active in marketing at all the conferences. There's a big team of EDF people, so they're very aware of having to get secure supply, and I think they're probably ahead of the curve a bit. But I think it's a great question. You're certainly not seeing key stakeholders getting out there ensuring that there'll be new supply, and I think they're leaving it up to the market economics. Now, you then say, okay, at what price, if we start to increase nuclear builds and it starts to go up, say, instead of just linear 2 or 3% growth per year, it starts to grow more. It just means that the people building those ones at the back end are just going to have to pay more for uranium. And given that uranium isn't a huge part of the input cost to generating electricity, that's probably why they're not too concerned about it. I don't think the world, it's the same as any commodity. If you put up the price high enough, you can get it out of seawater. I don't think we'll get to that point, but I think what you'll see is as we get new builds, they'll just basically depend on the market to set the price, the marginal price of production. And as demand goes up, obviously supply goes up, and the marginal cost production goes up. But then you've also got Kazakhstan, who at some point may want to increase production if the price is high enough, and you've got MacArthur sitting there with Cameco sitting there with MacArthur River shuttered, and then down the track in the late 20s, you've got NextGen and Fission with those mines as well, which will probably fill holes that are left behind by the Cigar Lake closure. So, if we do see new builds at the level that we think are going to occur, you're going to see a uranium market acting pretty much like any other commodity market during a growth phase.
Okay, no, it's just interesting to me that we try and do some research. I think one delightful individual called us clueless because we haven't been in this space for the last 5 years. But we do try and research this as best we can, and the stuff that we see out there says to us that the governments within these countries aren't yet treating this seriously, because maybe, as you say, they don't want to get involved with market dynamics, but because maybe it's a political hot potato for some. But at some point, it's going to either have to rectify itself through post 232, or they are going to have to step in and get involved. It seemed to me.
Interesting point you just raised, actually. The political hot potato. The last 6 months, I've been amazed at the way that, because of the climate emergency that is now creeping into the popular lexicon, people are now looking at nuclear. Even with the mini series of Chernobyl, people are still, that's like saying you shouldn't fly because the Hindenburg blew up. But actually, I watched Chernobyl, and it was really interesting. It was, although you're watching it as a person in the industry, you're going, okay, that's not quite right, that's not right. But it had more to do with the then Soviet style of approaching a disaster than it had to do with the technology. We know that technology doesn't exist anymore, so that's why the Hindenburg metaphor is so good. But what we're seeing, even the Australian, I'm just looking around for the report. So the Australian Industry Super Australia released this report called Modernizing the Electricity Sectors. It's a 100-page report. I'll make it available online with a link. But in this, they're talking about nuclear power, right? This is in Australia, talking about nuclear power. Right. So it's quite a good report. Yeah. It's very, very well written. There's some very clever people who have written this, just looking at all the different power sources. Because right now the Australian electricity market on the East Coast, because the West Coast is quite isolated because of distance, but the East Coast national electricity market's a bit of a mess. There's not much certainty. A lot of companies certainly want to see certainty. And the Industry Super Fund, I think they have about $3 trillion of investment. So, they're a big heavy hitter, and what they think and what they say matters. So that was when that came out, that was a lot of jaw dropping down here in Australia when this came out. So I'll put that. It's a really interesting, although it's Australia specific, there are some really interesting, good information in there on how they compare different electricity sources. So that to me is a really important watershed. And I think what's going to happen is that people who are anti-nuclear are going to find themselves on the wrong side of history at the end of the day.
Well, it'll be interesting to see how it all pans out. We haven't got long. We're in July. 2 weeks to go, apparently. Yeah. So
it will not be dry July for me. I can tell you, it'll be champagne corked. They just have to make a decision, right? They just do something, right?
One way or the other. I think you're not alone in that thought. Okay, well, thanks for your time, Mike. I appreciate it as always entertaining and insightful. I think, again, we should probably catch up again when you've kind of revised the DFS on Mulga Rock. It'd be great to sort of see what comes out of the project work on Alligator River for sure. Do let us know.
Oh, I'm excited about that.
And I'm remembering the words. You want to look after existing shareholders and make it right. So I look forward to hearing about that as well. So thanks for your time again today, and we'll speak soon.
Thank you. Appreciate being on. I think you're building up a great following. You're doing a great job. So I'm looking forward to catching up. So hopefully we can catch up. You're in London?
Absolutely. See you at the WNA. Yep.
Yeah, you absolutely need to get along to that. I think you guys should sit in on some of the sessions, particularly when the fuel report is released. So I think
absolutely
look into that on board. And then, yeah, so hopefully we'll catch up then.
Thank you very much for watching our video. We do aim to give you informed and intelligent information with which to make your investment decisions. So if you liked what you just saw, please give us a thumbs up. And if you want to see more insightful, in-depth, honest and unbiased interviews, then please click the subscribe button. So thanks again for watching, and we look forward to seeing you again soon.